Miss May, good afternoon. How are
Good
you?
good afternoon. I am blessed. How are you?
I'm blessed as well. Can't complain. Can't complain. Well, first and foremost, thank you for joining us. I know you're a very, very busy young lady, but you have exciting news for a lot of investors out there. So I just wanted to steal a little bit of your time today to kind of go over it. Yeah, people, as soon as I posted it, were reaching out to me like, "What is a DCR loan? What are you? I have bad credit. I need all the help that I can get." So that's why we're here today, so you can kind of school us up because this is really exciting. Well, at least for me, it's really exciting because I know the potential that it can help a lot of people out. Therefore, I wanted to take a little bit of time and get your insights on these new DCR loan programs, and maybe go a little bit more into detail of what is a DCR loan programs, especially for those that are self-employed that may not have their taxes in order, because you did mention that we did have a program where they don't need documents. So the platform is all yours. If you can elaborate, you'll be a blessing to a lot of people that are
Thank
listening in.
you. Thank you. Okay. Well, I'm excited. So, as you know, I have been in real estate, especially investment real estate, for almost 10 years. My background was wholesaling. I was a licensed realtor for a long time before I got into lending. And so, anytime that there's a new product, especially a chance to educate, I get really excited for that. So, let's just start with the basics. A DSCR loan is a debt service coverage ratio loan. Essentially, what this means in very basic terms is that it's a loan that's going to be based on the cash flow, the income of the property versus the borrower or the investor's income. So when they run the numbers to determine whether or not someone qualifies for the loan, instead of looking at tax returns, like you mentioned, bank statements, W-2s, things that typically they look at for a borrower, instead of that, they're going to evaluate the value of the house as a rental property. And if the monthly rents for that house are enough to cover the debt that would be incurred for the loan, so basically your monthly mortgage, you've got your principal, interest, taxes, insurance, and then if you have any HOA fees for the neighborhood. So add up everything you'd be paying every month for the note, and then add up everything that you would be earning monthly for the house as a rental property. If the rent is equal to or more than what you would owe monthly for your loan, then that house would ratio is what they call it. So this program is really unique because typically these types of loans do check credit. Though they don't check income, they typically have a minimum credit score of 640 to 660 depending on the loan. And with that, they kind of cap how much they're willing to lend. The program that we're here talking about today, through the lender that I work for, so I am a direct lender, it's actually allowing, instead of that 640 credit score, we will allow all the way down to a 500. Now, people might say, like, how? Why is that? What's the catch? So the catch is the property. A DSCR loan really truly is based on the value of the property. So it has to appraise. We have a process that we'll go through to make sure that the numbers are there, that it actually rents for the value that is needed. But because of that, we're able to accept people that have a lower credit score. This program also is available to foreign nationals. So if you have an I-10, we can work with you. You don't have to have a social security number. We don't check the W-2s. We don't check the bank statements. We don't check your tax returns. So that's the very basic kind of explanation of a DSCR and the credit score component. Before I continue, do you have any specific questions, or can I talk a little bit more about how we lend and what the options are available?
Yeah, you can continue. Touching on well, yes, I do have a question. Touching on the ITIN loan requirements, because there's a lot of people out there that don't know that they actually can get a loan, and especially a DCR loan with ITIN. Can you elaborate a little bit more on that? So, how do you determine credit for somebody that's not really familiar with that on the
So
ITIN?
that's a good question. You do have to have at least a 500 credit score. So when you get your ITIN, your individual tax identification number, your I-10, it gives you essentially, it's similar to a social security number. It's not the same, obviously, but you can start building credit. So there is a minimum of 500. We can go that low, but you do have to have some credit established. There is paperwork that you get from the IRS or the government when you register for your I-10. And that's the kind of documentation that we will request to just show that you actually have that. We do pull credit, we do check credit, but instead of the 640 minimum, we can go down as low as a 500. There is no requirement for previous experience as an investor. Some loans do require that you have had other properties, including your primary residence. This one doesn't require that. And there's no title seasoning. Because they don't require you to have experience, you also don't have to have a certain amount of time in a loan before they allow you if you wanted to do a refi, for example.
Okay, that's great that you mentioned that because I actually had another question. Do you do this type of loans all over the state of Texas and out of state?
So we do all over the state of Texas. We are able to provide this loan as well out of state. I don't have the credentials or criteria that I would need to confirm for the out of state, but I know that it is something that we can offer. So if someone has a property they're interested in another state, just let me know and I'll make sure. As far as what we're talking about today, the basic requirements are the same with regard to credit score, how much we'll lend on, and then the max loan amount. So to kind of touch on that, this is eligible for any property that's up to 4 units. So 1 to 4 units, either a single house, a duplex, a triplex, or a quadruplex. Anything above that would be a different product that we'd have to pursue. If you're looking for this loan as a purchase, we will lend up to 70% loan to value or LTV. If you're looking for a refi or refinance out of a current loan that you're in, meaning you already own the property as a rental, you want to refi out of, let's say, a hard money loan that you did to remodel the house and get it ready to rent, the max they'll do is 65% loan to value.
Okay, great. So you would do refi and for purchases. Can you
Yes.
explain, elaborate a little bit for those that are not familiar, what loan to value actually means?
So what they'll do is they're going to require an appraisal. Loan to value is going to be the percentage of the total loan amount that they're willing to lend on. So to keep it very simple math, if it were a $100,000 loan, 70% of that would be $70,000 LTV. If it were a refi, so let's say you had a loan balance of $100,000, I'm sorry, if the value of the property is $100,000, they'd be willing to lend up to 65%. So your loan would be 65,000. If your loan, let's say you're refining, if your loan is 100,000 and that you currently have, and we're giving you 65,000, then that difference you would be responsible for, right? But if the house is worth more, let's say 200,000, and you get the loan for the 65% LTV, and I'm not a mathematician, so I'm not going to try to do that in my head. So 130,000, right? So then if the house is worth more, then you're going to get a bigger loan. So 130,000 to pay off whatever debt that you have. And so in some instances, we actually just ran an estimate for a potential client who their loan balance is less than what the total loan amount would be for the refi. So we were actually able to include closing costs. So they're bringing $0 to closing using this loan to refi out of their hard money loan.
Oh, wow. And that's the hard money loans that are popping up a lot that you guys are doing DCR. I'm guessing it's from people that try to do a kind of investment, the property and go as they planned, they didn't sell maybe in a timely fashion, and a DCR loan would be a perfect fit for them.
So that's a great question. Sometimes that's the scenario where they got a hard money loan, they thought they were going to flip the house and sell it, and it maybe isn't moving as fast. Maybe they exceeded timeline, budget, whatever it may be. However, one of the caveats to the DSCR loan is that it does have to pass an inspection, meaning that the property cannot need any kind of repairs. So what
Mm.
happens sometimes is if a person purchases a house using a hard money loan, they're getting money to do the rehab, to do the remodel, to get it in condition for a rental and passing an inspection. So because the rates and the terms for hard money are typically higher interest rate, shorter timeline, instead of doing a full doc conventional loan to refinance, You can do a DSCR loan once the house is remodeled. Then you have competitive rates, a long-term loan, and then you can use it as a rental.
Okay, great. Great information to have. Just trying to see the options for those individuals that may be going through that, because I have gotten a few calls in regards to situations of that matter. So see if that would actually benefit them. So
Yeah.
we touched on the minimum credit score, the LTV. Um, what does no docs really mean? For do the borrowers need any financial documents at all?
That's a great question. And because we are really passionate about education and transparency, I will tell you some of the things that we'll ask for. When we say no doc loan, it's a general term to reference that we're not requiring documentation of your income. They're not checking your debt to income ratio or your DTI. You've maybe heard that term before, where they're
Mhm.
essentially doing a full evaluation of your income versus your debts to see how much, I guess, availability there is for additional debt. Instead of any of that, we're not requiring any of those documents. Now, there are some documents that are going to be necessary. So when we say no doc, we're speaking about your income, your tax returns specifically. Some of
Okay.
the documents that we will require include a valid ID. If you have an LLC, you can use this loan as an individual or in an LLC. So if you have an LLC, we'll need entity documents. If you already own the home and you're refinancing into the DSCR loan, we'll want to see the latest mortgage statement just to see where your loan balance is. And then insurance, if you already have insurance on the property. So it's a pretty short list. But when we say no doc, it is specific to the fact that we're not checking any kind of income requirements.
Okay, so this may be off the subject a little bit, or it may not be. I have a client that reached out to me because they bought multiple properties to rent out,
Hmm.
and they got into a situation where they didn't pay because of misbilling or whatever the case is. Another note, they had it's one of those one-off situations. They had the money to bring it up to date, but it looked like the loan people didn't want to accept the actual loan and bring it up to date. They didn't want to memorialize the payment. In this case, are they able to buy uh, from an entity their own property?
They're wanting to buy as an individual from the entity that
No,
specific property.
from the entity to an LLC.
Hmm. I don't want to misquote, so I have to ask that question, just because it sounds like there may be some legalities involved with that. With this loan, even though we take as low as a 500 credit score, I will say if there are any liens or judgments, those do have to be addressed and paid. So, in general, if there is an outstanding lien, let's say in this situation, in order for the individual to be approved for the loan, the loan itself would need to be enough and or combined with the cash to close to cover whatever liens or judgments are owed. But for that specific scenario, I would definitely need to check with my underwriting team because I don't want to promise something that we can't perform on.
Yeah, most definitely. I know it's one of the offhand. It just came to mind since
Yes.
somebody commented in that regard. So I asked. But going back to the DCR loan, uh, what factors may impact or delay a DCR loan that you commonly see?
Great question. So, one of the biggest factors is going to be the numbers, right? Does it actually rent for? Is it actually worth the amount that the investor, the client, the realtor is saying? So that's why an appraisal is required. This is a loan that can close as quickly as 3 weeks. The big factor determining how long it will take will be the appraisal, and of course, the client getting everything we need. Excuse me. But if for any reason the property doesn't pass inspection, meaning it's not in a condition that is safe and habitable for a renter, or if it doesn't appraise at the value that was estimated. Now, if that happens, that doesn't mean the loan is necessarily denied. It just means the number, the value that we're going to be able to lend on is going to be based on what that appraisal actually states. So that could then be, let's say you owe too much, that could kill the deal for you. Now, the beautiful thing about this particular product, there are no cash reserve requirements. There just needs to be enough for closing costs. So, assuming you have some
Mhm.
closing costs, as long as your bank account can prove that you have enough to cover those, they're not requiring a certain number of, and to clarify for people who are newer to the process, some loans require that you have enough for closing plus 3 or 6 months of reserves, kind of as a backup, right? If anything happens, we want to make sure that you're financially able to cover what's necessary. This loan, because it's going to be really strictly based on the value of the home, those reserves aren't required, just enough for closing. So those are some factors that can delay the process. If the property is in any kind of, and this is for any loan in general, so just kind of good practice to be mindful of. If the property is in a unique area, let's say it backs up to railroad tracks, or it's across the street from a mechanic shop, or you have a light pole or a cell tower in the backyard, or the house itself is unique, or if it's in a rural area, those are all factors that can make it difficult to set a value or appraise the home, or it can lower the value. And why is that? One, you're not going to have as many exact comparables, exact properties to say, hey, this is the same as that. The other thing, too, is when you think about renters, often we're thinking of families. So if it's something like a cell tower or a light pole or an industrial area or railroad tracks, those are all factors that can be considered risk and that can affect whether or not the house can rent or maybe how much it rents for. So again, doesn't necessarily mean it'll be denied. Underwriting makes the final determination on that, excuse me, but it can affect the value that they come back with, therefore affecting the amount of loan that we can offer.
Okay, great. Yeah, because I know that we mentioned it's a 3-week process, and I know that there's, everybody will kind of hold us to that when we say, "Hey, you know what? You told me it was going to be 3 weeks," but of course, that we have to consider there's things that may delay um, this type of loans or every situation, I guess, differs.
Mhm.
So, and another thing you touched on just now is traditional loans. I know it's probably a question that if somebody's watching now, they're asking, so how do the interest rate differ from a regular traditional loan from a DCR or R loan, especially with no documents? I mean, is it
Mhm.
costly? It's going to cost me more money. I mean, but was my bottom line? What am I looking at as if I'm an investor?
That's a really great question. So everyone gets so obsessed with rates, and I get it, especially the average consumer, the average borrower who doesn't talk real estate on a day-to-day basis. I mean, those of us who do, we still have questions, right? So I
Correct.
understand that a lot of, especially the general population, it's like interest rates, are they up, are they down? Trump's in office now, is that changing everything? And it's exciting and it's interesting, but at the end of the day, I feel like it changes regularly and people get so focused on one thing that they lose sight of maybe their goals. So I want to explain. If your goal is to be an investor, and if the financial goals that you have can be met by a product, a service that's available to you, you as an individual have to determine, is it worth it? So a conventional traditional loan, you might be looking at interest rates in the 6, 7, 8%. This is just a range. With hard money loans, you're looking at anything from 12 to 15%, depending on the lender, but those are short term loans. With DSCR loans, we have everything from the 10, 12% and as low as 6, 7%. They can be pretty competitive. Now, with anything, there's a cost for that trade, right? You want the better rates, whether you have a conventional loan or a DSCR loan, it's going to be based on what do you have to offer. In some scenarios, it can be the higher credit score, the larger cash reserves, the better cash flow the property has, to offer. Those are all things that can impact your DSCR loan, getting you a more competitive rate. But you'd have to be willing to submit way more documentation and information and have the credit score and the finances to back that. Same with conventional financing. They're going to look at how much debt do you have, how much money are you making, what are your tax returns, W-2s. They're going to check way more, and it's going to be a type of product that's much more thorough because of the type of backing and protection it has, through the government. Hard money loans, it's quick money, high interest rate, and it's going to be based on the property and potentially some of your background. If for you 15% doesn't matter because your goal is to invest and you know you're going to get that money back when you do the flip. If your goal is to be a landlord and to build a portfolio of rental properties, and you understand that these DSCR loans, this one in particular we're talking about today, that's a no doc loan, it can be anywhere from 9 to 10% or more. I don't want to pigeonhole the number there. But if for you, not having a high credit score and not having a bunch of extra cash means that you have a chance to invest and use this loan, then that 10% rate is not going to be a problem. If you can only focus on rate, then focus on improving your credit, your income, and your cash reserves for sure.
Awesome, awesome. That's great information. And I like to elaborate a little bit about that. What you mentioned, the category of the particular loan that this applies for typically. This is not an investment um, chat, but I guess since we're in the same world, I guess we kind of understand where you're coming from, and it's good to kind of educate those viewers that are watching. This particular loan is really to try to get you set up to invest. If you're an investor and you're looking for a tool to utilize, this is a great tool for you because it's going to get you in the door. A lot of times, we always want to win, and what I mean win is economically. We want to, of course, we all want to make money, but there's times that you just almost have to take the hit. Maybe you're not going to make too much money, but you're going to get a lot of experience. Of course, you want it to be as minimum as you can of economic loss, um, but if your bottom line meets at least a little bit of gain, I
Mm-hmm.
always suggest any investor for them to jump on any opportunity they have, especially to leverage somebody else's money. And correct me
Yes.
if I'm wrong. I
No,
mean,
you're right.
I started out like that, leveraging others people's money, and eventually grew my own capital. Made some mistakes along the way, which we are going to. Everybody, there's risk. Is real estate, so there's
Mhm.
always risk in it. You always hear the good in real estate, but you never hear the bad, right?
Yeah.
You never hear that there's challenges that come around, there's situations that happen. Of course, may her company may send an appraiser, we're gonna send an inspector, but at the end, there still could be foundation issues. There could be plumbing issues. There could be things that will pop up that you really do not know. But this is a great tool for anybody that's really starting out. Don't look at interest rate. Look at your bottom line, and
Mhm.
of course, doing your numbers correctly. What I love about this program, May, and correct me if I'm wrong, that I feel like the bank, the lender takes the risk with you
Mhm.
because they're looking at the property if it's actually profitable. If it's not profitable, they don't want to mess with it.
Right. Absolutely. That's
And
why I said it's gonna be really based on the value of the property more than you.
so to me, it's like this is great too. Like I get excited when you said $500, 500 score. Like what?
Yeah.
That means my primo can get involved.
Dale pues.
Yeah, because there's a lot of people, there's a lot of Hispanic, mi gente latina que está viendo que tienen dinero ahí bajo el colchón.
Sí.
So tienen mucho dinero bajo el colchón que no, they don't trust the bank system, but they want to get into something. They get enough, they have enough that like, hey, bueno, si tengo que sacar dinero para poder hacer una inversión, lo saco, pero si no, no. Pero siempre la situación es que se encuentra en una situación, bueno, que no puedo, tengo este dinero acá y no lo tengo en el sistema,
Mhm.
cuánto tiempo para meterlo. Entonces, it just fits, my peeps, to be
Yes,
honest with you.
yes.
You know,
Preferimos efectivo para todo, no queremos usar crédito y por eso 500, lo mínimo. You don't
lo
have to have
mínimo.
a lot of credit, and you could have a lot of I get it, life happens. I'm divorced, I've had to restart my life happens. So even if that's happened to you, that doesn't mean that you should be denied the opportunity to invest.
Amen. And wow, and you touched a very sensitive subject there. There's a lot of things that happen along the lives. So maybe you have a low credit score because something happened, just as you
Mhm.
mentioned. Life happens, but there's that individual that wants to take advantage or wants to take a leap of faith into um, uh, pursuing an investment, this is a great tool for them as well.
And on that
And
note, some of those other products that offer better rates, lower costs, do require experience. You have to have title in your name, and your primary residence for some is enough. And for others, they say, cool, you own your own home, but we also need to see that you've been an investor outside of your own home. So, products like this, programs like this, can give you that chance to have documented experience so that then you can be eligible for the better products down the road.
that's awesome. Are you able to share any success stories in regards to these DCR loans? I know I had customers that have done it, and it's been going great for them. But in your line of business, in you're actually the one holding the money, right? what what success stories have your clients benefit from DCR loans, and what and any type of loan that you may have?
Yeah, absolutely. So I think the DSCRs are unique. So hard money, right? That's if you're buying to fix and flip typically. The DSCRs, I have a lot of clients, so there's not one specific, but especially in our community, it's an opportunity to have that long term wealth. Because with flips, you're making a return, right, on your investment, but it's typically cash that you're getting back. Having long-term wealth, being a daughter of an immigrant, seeing my father own a home, seeing him starting to invest in real estate, let me just use him as an example, I guess. These are the type of products that make it possible for him as a father, as a grandfather, to be able to leave a lasting legacy, right? This is cash flow that's going to be coming in on a regular basis, but it's an asset that you're going to own over time versus a flip, which flips are great. And I know some investors, like, that's their bread and butter. They're passionate about the creativity that goes into those experiences and making that return. But with the DSCR products, having a chance to own real estate and hold it long term, I mean, that's the dream, is to eventually get to a point where you have enough passive income, enough money that you're making without having to work for it, right? And you're creating a home and a space for families to enjoy and to experience. So I think that it's an incredible product that really gives people to have an impact beyond just making money fast. It's lasting investment for sure.
Wow, I love it. I love it, and I love the passion behind it.
I get
You
all
know,
nerdy
and
about real estate and ministry. I will talk all day long.
well, you know that's what the YouTube channel is called, God and Real Estate, because since from the beginning of time, it's always been what, but God first, and then what we always fight for, right? You know,
Yes.
real estate. You know,
Yes.
en español es bienes y raíces.
Yes.
So todos los bienes que uno se pelea, and I'm really passionate about real estate too because, man, you touched a very sensitive. Well, you touched a few sensitive subjects today, but it builds wealth, and you know, it builds long-term wealth, especially to la gente latina que de repente no tenga esa educación.
Mhm.
You know, de repente estamos en un sistema donde no nos enseñaron este tipo de cosas, y que
Mhm.
uno le puede enseñar este tipo de cosas, de verdad que es una bendición. Es más, es una bendición poder compartir ese tipo de programas, este tipo de cosas que ellos pueden hacer para entonces hacer algo para la siguiente generación y
Exacto.
ayudarnos de uno a otro. Y de verdad que, wow, me tocó eso porque eso es algo que siempre hablo con mi esposa, ¿verdad? Que le pregunto, hey, you know, hay que enseñarle a, a nuestra comunidad cómo hacer eso. Ella es la parte de impuestos, pero que es otra parte, bueno, muy importante
Sí.
cuando en lo que es los préstamos, pero también educarlos en las posibilidades que uno puede hacer ya teniendo sus finanzas en orden. Y que, bueno, bienes y raíces me encanta porque hay muchas maneras que uno puede tomar bienes y raíces.
Lo que yo sé es que no es una falta de oportunidad, es una falta de información, de educación. Y por eso para mí me siento muy apasionada porque yo sé que hay oportunidades por todas partes, pero a veces no sabemos dónde, ni cuándo o cómo empezamos. Y por eso a mí me encanta. Si puedo tener la oportunidad de explicar. If you don't want to come with me for your loan, fine. Let me at least educate you and give you resources so that you're making an informed decision and that you feel confident and that you're not taken advantage of. Because with anything, there's always going to be someone somewhere trying to take advantage. And I'm just like you, passionate about honoring God and doing things the right way.
Correct. Wow, love it. So on that note, I know you mentioned, of course, we want them to reach you, and we'll
Mhm.
get it to that, right? We want them to feel comfortable with you
Yes.
and being able to get a hold of you because I know that you'll definitely take care of them. But what's one of the questions that if I'm a buyer, or I'm an investor looking for this type of loans that I should be asking a lender?
I'm sorry, they are doing lawn work today. It's normally on Tuesdays, so if you can hear the background noise, I apologize. So questions that investors have when they're coming to me for these types of loans, what kind of questions should they be asking a lender?
Yeah, so what kind of questions should I be asking if I'm coming to you? May, it's my first time. Um, I'm trying to get this house I've seen in my neighborhood. I think it's a good look for me because I can be right there and I can manage it. But I need a loan. And it's a typical scenario that happens, right?
Mhm.
I don't do my taxes, or I don't report enough of my taxes because tú sabes, yo no quiero pagar taxes.
Mhm.
Um, or I have like a few baby mamas.
Mhm. Mhm.
Whatever the case may be. So, ¿qué pregunta yo debo tener para un prestamista si es que no eres tú con la que yo estoy?
Mm. Esa pregunta es interesante porque típicamente yo tengo las preguntas. I normally have the questions, right? So I guess thinking backwards, what are questions that I would ask a potential client or questions that you should be looking for if you speak to another lender, right? Number one is communication. Is the lender that you are potentially going to work with going to communicate consistently and clearly? Because a lot of lenders, they don't answer their phones, they don't respond to their emails. That 3 week timeline could easily be a month and a half because the
Mm.
lender didn't follow up with underwriting or the client or whomever's involved. So communication is, to me, one of the most important facets of this experience, especially if you're new. You want to know that the person that you're working with is going to be available to either answer your questions or get the answers to the questions if they don't know. Because I'll be the first to admit when I don't know something because I don't want to tell you wrong. The next thing is going to be, do they know the product well? I don't need to be an expert on every line item that the underwriter is going to review, but I need to know the product well and have a team available to, like I said, make sure that we're prepared for any obstacles or hurdles that may come up, any questions or concerns. It goes back to communication. And I think also it's important to know some of the risk versus reward with the product. So, am I communicating? Do I know my product well? And can I actually help you as the investor understand risk and reward? What's it going to cost you short term, long term, right? What kind of closing costs and out of pocket costs for things like an appraisal and an inspection? Am I communicating those costs to you? Because when you're trying to evaluate, is this a good deal for me? Can I afford it? Those little things can add up, especially if it's your first deal. The condition of the home, the location of the home, the value of it as a rental, those are things that you as a client should have a trusted realtor like you, Luis, to make sure that the value is there. And then we work together to communicate to make sure that we're getting whatever information the lender, the underwriter needs to approve the loan, and that the client knows what costs they're anticipating in the immediate future for closings, but also even after that, just being prepared for the long term. What does it mean to really be a landlord, to be an investor that owns a property?
And what comes behind it?
Yes.
Wow. Well, I think you answered my next question that I actually had in mind because I was going to ask you, what if someone was in the fence, was the one number one reason they should come and do this type of loans? But I think you hit pretty much everything on the nail. So you answer you answered my question that I had in mind. But I hope that you can one day come back and join us and actually present what we have ability so you can present it and actually what it looks like because you hit something that really important that's educating the client and also the cost that go behind it, the cost that goes behind the appraiser, the cost that goes inspection, the closing costs, insurance. There's a lot of people that don't know that there's costs because they're all always worried about, okay, my down payment, ya tengo mi enganche, y entonces no van mucho en detalle and like exactly what comes behind it. So nos toca a nosotros, even though we're not loan officers, and I have experience in financing, um, ser financieros. Entonces uno tiene que explicar. Yo creo que es mejor a veces bueno, que alguien que hace todo esto todos los días, que lo explique, especialmente este tipo de préstamo, especialmente porque ya estamos en el área de taxes, tax season. So there's some people that don't know what to do with their money, you know. So maybe we can get them a rental house. We can get them the
Exacto.
first. We can get them the first investment product. Um, May, somebody wants to contact you. ¿Dónde te contactan?
Okay. Prefiero teléfono. You can call me, text me, 936-245-4010. You can find me on Instagram, Invest with May. You can email me, may.correa@snmc.com, which will share all of this. And then, of course, on Facebook. But honestly, I am one of those lenders, mortgage loan originators. I want to have direct communication. I don't know if it's the Latina in me or the hustler in me, but I'd rather have a call, a text. And then, of course, you can learn and laugh at me if you follow me on Instagram.
Most definitely, most definitely. I know I do enjoy it too. But
Likewise.
May, well, thank you very much. I know I took more than I told you I was going to take a few minutes, but it just got it. The conversation got really intriguing. Really appreciate your time. We'll definitely be sharing your information on our website and our platforms, and we'll hope to see you soon. You know, hopefully come back and give us some more insight because you not only do DCR loans, you also do traditional, correct?
Yes, I'm fully licensed, so we can do conventional lending, FHA loans, down payment assistance loans, I-10 loans. We can do bank statement loans. We do commercial lending as well, hard money lending, de todo un poco.
Wow. Okay. So it's a little teaser.
Yes, yes.
We got to go into it. Yeah, you mentioned a lot of loans that I'm really interested in. Well,
Good.
mate, thank you very much. Really appreciate it. And until next time,
Thank you. God bless.
God bless you.